Hey, hello guys. So this is Shafiq from FACADEMY. Today we're going to talk about technical analysis. I'm going to share one of the strategy that I love a lot in the market. I use this strategy and make a lot of profit out of it uh, from my throughout my experience in the market, which is Bollinger Band Squeeze strategy. But before we talk about the strategy, we're gonna discuss about the structure of Bollinger Band and how it can help us to understand the price and find a good entry and exit better. And of course, at the end of the video, we're also going to share our technical analysis outlook of OXY, Occidental Petroleum Corporation. But before we continue, don't forget to smash the like and subscribe button. And don't forget to smash the bell icon on the right side. Alright guys, so let's start with Bollinger Band structure. Okay, so the one that you see on the chart over here is OXY price with Bollinger Band indicator. Let's hide the price and you can now see only Bollinger Band. Okay, by default, Bollinger Band use 20 as a variable, and this 20 is actually moving average 20, which comes from the middle band, right? So the structure of Bollinger Band, it have upper band, middle band, and lower band, right? Upper band, middle band, and lower band. The middle band is actually moving average price, right? Is moving average 20. The default value is 20, and upper band and lower band is basically the standard deviation of the moving average. It calculates the disparity between the price and and the moving average. So from there, it can expanding and contracting. So for example, over here you can see that it is expanding, right? It is expanding over here, and it is contracting over here. Same likewise, this is where it's contracting, right, before it go expanding. So what does this mean? um, when Bollinger Band is contracting, or what we call squeeze, means that the volatility of the price is low, while if the Bollinger Band is expanding, right, means that the volatility is high. And there's one important technical analysis theory, or in fact a technical theory, right, which is uh, low volatility will be followed by huge volatility. So the idea is counter that showing low volatility, showing sign of low volatility will be followed by large amount of volatility. Okay, so when it's squeezing, all right, it will be followed through with exploding volatility, either up or down. All right, so that is the first concept. But let's go back to the basic, right? So the basic, just now I said that the calculation of standard deviation is based on price against the moving average, right? Price against the moving average. So why this is important? Because there's a one theory in technical analysis again, and in fact theory in the market, even fundamental use this theory, which is mean reversal theory, right? Means that you know uh, the price or even the earnings tend to go back to the moving average, based on tend to go back to moving average. So in this case, the price tend to price that steer away from the moving average tend to test the moving average again, tend to revert back to moving average again. So price that steer away from moving average tend to go back against the moving average, right? Same here and whatnot, right? So this is basically theory that we can see from the Bollinger Band, okay? And for you guys to understand how the standard deviation is contracting and expanding, basically this momentum, right? If the momentum is low, if the price steer away from moving average slowly, right? the upper band and lower band will also expanding slowly, right? But if the price, steer away from the moving average in very fast movement, or very far, very fast movement, right, with huge momentum. So the Bollinger Band upper and lower band will expanding, right, showing that the volatility is high, right, because the difference between the price and the moving average is high, right, in short amount. Okay, all right. So that is the structure of Bollinger Band, right? So hopefully from here you guys can understand the basic structure of Bollinger Band. But before we continue with the strategy, right, there's a one important part that I want to talk with you guys about, which is the logic of Bollinger Band. So if you guys know Bollinger Band, right, actually it is same like your uh, distribution curve, right? So in distribution curve, you know that bell curve that we learn in the schools, right? So bell curve is basically a calculation of distribution of data, right? There's a normal distribution. There's a mathematical statistic theory where the data will spread in normal distribution, right? Sometimes it's skewed to the right, sometimes it's skewed to the left, right? That is understandable. But yeah, this is basically, if we really understand Bollinger Band, it is actually the distribution curve. This is actually the bell curve that we look from top view, right? We look from sky view, lah, basically, right? All right. So to give you guys the understanding, okay, let's see one by one. All right. First, we in the distribution curve we have the mean price, right? So in Bollinger Band we use middle band, which is the moving average 20. In fact, this is the mean price. This is the mean data, right? So from the mean data we have standard deviation 1, standard deviation 2, standard deviation 3, right? And um, the theory is the data will fall in between standard deviation 1 68.2% of the time, right? And the price will fall in standard deviation 2 95.4% of the time, right? So that's why if you look at Bollinger Band, 95% of the time, right, the price traded inside Bollinger Band, right? So why is that? Because this is basically our, same like bell curve, right? Same like distribution curve. The data will fall mostly 95% of the time in between standard deviation 2. Okay, so the what we see over here is the one that we see mean price is this point. Okay, the one that we see standard deviation 2 is this point, right? And standard deviation 2 this point. So it is basically distribution curve that we see from sky view, right? The top view, right? And it's continuously plotted against the price, or on the chart. So that's why we see Bollinger Band, right? And when you understand this, right, basically you will understand that it is actually makes sense for us to even use standard deviation 1, right? Why? Because 68.2% of the time, price will fall inside the standard deviation 1. So why this is very useful? Because from standard deviation 1, we can anticipate the breakout we can anticipate a breakout, or we can anticipate the price momentum, right? Just to give you guys an example, right? Over here, you can see that the price squeezing, okay? The Bollinger Band squeezing. When the Bollinger Band squeezing showing that it have low volatility, and the concept is low volatility will be followed by large volatility or huge volatility. And how we want to anticipate that the price is going to break the volatility, by use standard deviation 1 as our first resistance. So when the price break this standard deviation 1, right, it trigger our first signal that potentially it will break the volatility. Potentially, right, the Bollinger Band will expand it, right? So that's the concept lah, right? That is Bollinger Band Squeeze strategy, right? Low volatility will be followed by large volatility, right? So another important aspect of Bollinger Band also is um, if the price traded above or in between the standard deviation 1 and standard deviation 2, that is wrong, okay. If the price traded in between standard deviation 2 and moving average, meaning that it is on uptrend. If the price move uh, in between moving average or middle band and lower band, or moving average and standard deviation 2 lower band, it is downtrend, right? So from here we can see that the price is still on uptrend, right? So Bollinger Band is a trend and volatility indicator. It shows us the volatility based on momentum change against the moving average, based on mean reversal theory. So that is Bollinger Band, right, as a structure. And by now you guys should understand that, Bollinger Band, how Bollinger Band can help us with understanding the price characteristic. All right. Now, for Bollinger Band Squeeze strategy, right, just like what we already discussed, we actually want to find a squeeze in Bollinger Band. And for you guys to understand, right, why squeeze is important, because low volatility, right, most of the time indicating that there is a footprint of money makers, right? Either they accumulating or distributing the position, right? So when there's a low volatility, means that they squeeze the price so that they can accumulate or distribute at a certain price level, right? So that's why squeeze is an important setup that you want to find, right? That's why we use Bollinger Band squeeze strategy. Whenever we see a squeeze, right, we anticipate that, all right, this is where the potential accumulation distribution, right? What we want to see next is price break the volatility, right? And how we want to anticipate the price break the volatility, we can use standard deviation 1, right? And of course, standard deviation 2, right? And when the price breaks standard deviation 2 and continue to trade above standard deviation 1, right, it is considered strong momentum uh, and high volatility counter, right? It is useful for us to make, it can help us to make a huge profit from the setup, right? So that is Bollinger Band Squeeze strategy. Okay, so repeat again, we look for squeeze in Bollinger Band, right? Then we use standard deviation 1 to anticipate the potential breakout. Then we confirm the breakout is standard deviation 2, right? And as long as the price move above standard deviation 1, it is considered still uptrend. It's considered still, continuously moving accordingly to the huge volatility or huge momentum. Okay, so that is Bollinger Band Squeeze strategy. But you guys need to remember, right, that not every strategy is perfect, right? There's a weakness that we need to consider, that we need to know, so that we be mindful with the strategy. Of course, they also have a hit fake out, right? Hit fake out is basically when the price, for example, right, on this level, on this area, when the price breaks standard deviation 1, showing our first signal that it is potential break from the squeeze, right? Then the price also break the standard deviation 2, showing that there's a confirmation of breakout from the squeeze. But the next day, the price revert back to the mid, right? Or revert back to the lower price. So this is called hit fake out, right? But should you take out your position? Not yet, right? Because this is where the support resistance is your friend. Basically, what you need to do, right? Because we know this is our accumulation and distribution. So whenever the price break the resistance, it indicating a markup movement. If the price break the support, it is indicating the markdown movement. So the confirmation when we see head fake out, right, is first we should not be panic, right? We need to refer to our portfolio. Should we take profit or should we sell half or whatnot, right? Depending on your uh, portfolio strategy. But the ideal is basically you need to stay calm, right? And only take out your profit, or sorry, only take out your position, right? When the price break the support. Okay. So sometimes we see head fake out, right? Something like this, and it break the support. So it is confirmed that this Bollinger Band Squeeze strategy is a bullish trap, or probably we can say that it is actually a distribution peak phase, right? If we see head fake out and also support broken, right? But if we not see the support broken yet, right, we may see few tests on the resistance. So this head fake out, right, is just a signal for us to be careful. The confirmation is when the price break the support. So as long the price is still maintained above the range of support resistance, and also the Bollinger Band squeeze, or the Bollinger Band is still squeezing, right? So we should be patient. We should be waiting for the potential breakout to happen. But most of the time, whenever we see the confirmation of price breakout from the standard deviation 2, it is our entry, right? So that is Bollinger Band squeeze strategy. So we now already covered the structure of Bollinger Band, how you can understand Bollinger Band. Then we learned the Bollinger Band squeeze strategy, right? How to enter, right? What to find and how to entry, right? When to pull and exit. And lastly, the weaknesses of head fake out or bullish trap, that we need to be careful so that we're not trapped inside the bullish trap, right? So that is the three part of the Bollinger Band that we want to discuss, right? If you guys want have any question, right, don't forget to ask in this comment section. If you guys want to join our Discord group and have a direct conversation with us in FACADEMY, you can join us in our Discord for free, right? You can ask anything, right? You can ask about indicator of Bollinger Band. You can ask about uh, Bollinger Band Squeeze. You can ask anything, right? We can discuss anything over that, right? So for the last part, we're going to talk about OXY technical analysis, right? So what is our outlook on OXY? So we believe OXY is on uptrend movement, right? So what we actually looking for now is continuation of uptrend, okay? And for OXY, right, if you look from the weekly chart, this is still like base 2 lah, right? This is still early accumulation distribution phase. This is still early bullish run up, right? So we are looking for second accumulation base, right? And when the price break out from here, it should trade higher, right? But we need to be patient because the first base takes quite a time, right? So here also is supposed to take quite time, right? And if we revert back to daily price, right, our entry is based on Bollinger Band Squeeze. Okay, first this is where the Bollinger Band Squeeze shows, right? The one that I mentioned before. And here also showing us the Bollinger Band Squeeze, but got a head fake out. Alright, so our decision is as long as the price trade above the support, right? And for this one, actually we use standard deviation 1 as our initial support signal, right? It basically like alert for us to be careful. After that, we look at the historical price support of 55.5. Okay, so as long as the price maintain above both of these levels, we can still, we can still be okay. And together with that, right, we also will read the setup of the accumulation based on Wyckoff schematic to see whether it have potential to go markup or not, and what stage is the accumulation is. So we in general still bullish with OXY, right? We believe on the fundamental. We believe that what happened at the moment is basically is just a money maker, want to accumulating or distributing the counter. We believe it is supposed to be accumulating based on few catalysts, which is already been discussed by Warren, right? You can watch the video, our video on YouTube, right, about OXY. So that is our fundamental and catalyst, right? And now this is our technical outlook, right? That's why we are still holding our OXY. And in fact, if the price drop to a few level, let's say 55.5, right? And based on our reading that it is still accumulation phase, we will add up some more position, right? So that is OXY, right? Hopefully you find this session helpful. Hopefully you guys can take something valuable out of this session. I think that's all, right? So don't forget to share this video if you find it is very informative. Don't forget to like and subscribe FACADEMY. So see you guys again next time. Thank you. Bye.